I'm not late. It's still 12:30. What are you talking about? What's up, Bensag? How's everyone doing today? I was first. Everyone saw it. No, you weren't. It was Jellison. Jellison was first. Good afternoon, Pickle Man. I let my sub lapse for about 4 days. That's all good. I need access to the Discord again when you get a chance. Also, my hometown Sears is finally closing. The end is nigh. Okay, you should already have access to the Discord. You shouldn't need me to re-add you. It should just happen. Like if you're unless your YouTube's different now, in which case just link your YouTube to Discord again. What's up, fellow my lower middle class people? What's up, Jason? First to speak, but there was another like before mine. I see. How was the White Castle? Not nearly as bad as I expected it to be. How's your ex and when's the date with her sister? She's in a state, and the latter may not happen. We'll see. So what's everyone thinking for this week? We got we got we got a lot of shit going on. It's gonna be pretty intense. GME calls. I'm just gonna sell covered calls on it. I don't really like buying calls for fucking ETF FTDs. Not anymore. Not since like September turned out to be meh. I'll sell the shit out of some covered calls though. Crash? I don't know if we're gonna get a crash. Doesn't that seem like a bit much? Like, yeah, FRC failed, and yeah, Yellen and Powell both said that the banks were stable and that we weren't going to see any more failures. And yet, here we are, more failures, right? So, typical US government shit, right? Now that the important stuff is out of the way, what's happening with SPX this week? Any new ranges you're expecting? I don't think the range has changed that much. We're in the same situation, we were 2 weeks ago. There's no, real upside without uh, a lot of expense, right? There's no upside liquidity and there's no profitability in positions used to drive to the upside at this point. So we've hit that upper range of sold calls again. VIX has bottomed out again. Um, it's really not that much different than where we were right before SLD. Um, so I expect that things are going to wait towards the downside in the short term at least. Um, I mean, obviously the Fed's going to make some decisions this week. I think some big ones. This one's pretty important. The 0.25 rate increase is on the table, right? But this this is kind of limiting for their options, right? Their upper target range is 5.15% right now for the terminal rate. They had previously discussed moving to the terminal rate and holding, right? Which, to the market means pause. I can't see them moving beyond this meeting with inflation in the state that it currently is without either advancing the terminal rate and changing their guidance or moving in with a stronger rate hike before holding. Um, the problems in inflation persist. Even though PPI is down around like 4%, you know, headline is still at 5 and core is at 5.6. And this coming CPI report is probably going to see an increase in headline. I don't know if we'll see an increase in year over year, but the month over month is going to be up again. Meanwhile, all of these, month over month and PCE as well, month over month have been climbing, right? For the last like four months. So I think with this information, they're gonna at least want to create wiggle room, right, in that terminal rate. Because if they cap themselves off at 5.15, the market's just going to get super bullish and be like, the Fed paused and everything's going to run, right? And then they've got to claw that back. And that alone would probably add fuel to the fire, right? So, they lose a lot of their ability to control equity pricing with their narrative if they don't advance that terminal rate. Real question is, are we straddling FOMC at 4,100, 4,150, or 4,200? Well, we got 3 days to figure that out. Pretend like you're a bull and sell me that this week is going to be great. The Fed's going to go 0.25 and then pause rates for the rest of the year. Inflation's already declining. And earnings, while down 30% year over year, are totally going to beat all of the extremely lowered estimates for the rest of the year. And the banks failing doesn't matter. We have more banks. In addition of all the things, I don't know if you saw on the Discord, there were some discussions about the central banks stopping the temporary USD 7-day maturity swaps negotiation. I mean, that's just shutting down. That program was only supposed to be for a limited period of time to create sufficient liquidity. They could always move forward and reinstate the program. But there was a liquidity crunch there around the time that all the other banks failed. So yeah. Do you see capital continuing to flow out of equities on the whole? Yeah, we're not seeing any money coming into equities. We saw yields drive down into the end of the week. Treasuries back up again. So all of that, especially the big drops in yields, indicates a lot of interest in the bond market, right? Money market funds are still driving higher. The Treasury general account didn't really bounce back in any significant way over the last couple weeks. While it is sucking liquidity out of the market, it's not really recovering in the way we would have expected. So I mean, it's still incoming. It takes a few weeks, but it's been slow to get going. No crash, but man, they need to price out those rate hikes for later this year. 7 months left in the year is not much time left to drop rates, especially if they raise them this week. Yeah, and yet, I mean, Powell already said that they have really no intention of reducing the terminal rate this year, right? Or backing off or making any rate cuts And yet the pricing in of rate cuts has persisted. Now it doesn't exist in the SOFR market, where they're speculating inflation will rise higher and the federal funds rate is going to move up. Now targeting like 5.25, 5.5, 5.75 by like September of this year. So I don't think. I mean, it's hard to say why they continue to price in a turnaround. We've discussed this at length before, and kind of landed on maybe they expect it to just crash between now and then. A crash would get the Fed to turn rates around, provided commodities spiked reasonably fast and they were able to bleed off any secondary inflation bump. Welcome to Dillionaire, man. Thank you so much. Hit me up on the Discord. I'll get you added to the country club after the stream, man. Thanks, Gordon. Lost the license rights to Ramsey. Does it really matter what they do at this point? Like, the market wants down? No. More importantly, it needs down. Yeah. We do need to see some downside to see repositioning for the long side at a minimum, right? So, positionally, yes. The market still wants to see more downturn, right? I don't know what range that's going to bring us into without, additional negative news, but yeah, positionally we're overdue for a pullback. This could still really run like one more day, or we get kind of a flattish day Monday, right? Although I think with the FRC shit, we're likely to open gapped down tomorrow. I would imagine large institutions share your logic and may explain the recent pump and VIX shorting to load up on the downside. Well, they've made it cheap. The downside is very cheap right now. So put buying is incentivized. I mean, one could argue that from the point at which the banks failed, the market's done nothing but move up, right? So, this in itself could be, risking off by long positions. Recalls across the board, reining in of margin. It's not like primes are going to be taking on more risk. They're not going to risk on into, treasury illiquidity and other bank failures. FRC is, I said like 2 weeks ago, FRC is going to be really important in how this like short treasury theory shakes out, right? Because the interesting thing about FRC was the other banks tried to bail it out. They tried to save it. And the only reason they would try to save FRC instead of letting them fail and scooping up their assets for pennies on the dollar is that FRC presented systemic risk, right? Particularly to their positioning, right? What's the theta delta range you're looking at to take advantage of VIX? I mean, if I'm going to take advantage of a spike in VIX, since I already hedged my portfolio with VIX, I'm not playing any calls on it. But I would say Yeah, like 90 to 120 DTE SPX between 36 and 3200. I know that's a broad range of strikes. Some are better than others. I have a few positions to take advantage of any kind of multiplier on the huge amount of Vega on those contracts, but not a ton of positions for that just yet. Let's just stop them from pumping the market with zero DTE. Even the Fed announces no pause. If they're making enough off of the zero DTE, why would they care? They don't. I don't think there's anything preventing them from pumping it again. It does. There's a feedback loop of losses over time. The longer dated positioning and the futures positioning that supports the pumps bleeds off, right? So, um, there's diminishing returns on these pumps, as we've seen repeatedly in the past. Um, it's not something they can keep up forever. Like initially, it's profitable the first day, right? Where they start buying the zero DTs and buying the futures, and it runs up into that longer dated call interest. Um, but once that longer dated call interest starts to take profits, right, then the market maker support for the call trend starts to break down, as does the market maker hedge. And so it starts to take more and more and more zero DTE buying, not to get the price up anymore, but to just stabilize the price, right? And this is, this is something we saw play out really obviously over the initial period in the early part of this month, where we first ran up, right? Over this period, more and more zero DTE volume was required in order to stabilize the price in this range. But the overall returns for the period were really minimal, right? After that initial pump, I mean, we only saw another 100 BPS to the upside, and it was for less than an hour, right? And if you kind of weight VWAP over this period, you can see another effect of that. Let me see if I can find it. God damn it, where is that? So we're not really ever able to break that upper range, right? And this is largely because of all the sold positions up here. So they're, in order to propagate all that buying, they're selling puts underneath, and they're selling calls above, right? And that really limits the range in which they're able to trade. And they started to we started to see those short put positions hit risk um just last at the beginning of last week, right? And then that turned around really, really hard. Obviously they want those to expire out of the money. But the call sellers also want their positions out of the money, and that leaves us relatively range bound. For small port to get exposure to the Fed meeting, are options better on XSP or SPY? Hmm. If you can find a strike on XSP that is liquid, then XSP has, a tax advantage, and a cash settlement advantage that SPY does not. Tell me this sounds right. People are bullish on the FRC failure because, hey, it failed. It can't fail any further now. Yeah, that's a thing. Um, Currently running because your lazy bag of bones won't do it for me. Enjoy your Sunday. You too, Popcorn Trader. Enjoy your running. Like the stream. Everyone needs to like the stream. Also, say gap down again. Oh, Jesus. JPM and PNC submitting final bids right now for FRC. Yeah, I know, I heard. Like Citadel with Melvin. Yeah, not that much different. Remember, there's no altruism in finance. JPM and all these other banks weren't giving FRC $30 billion because they liked them. They were giving them $30 billion to prevent a default because that default would put their positions at risk. That's almost always true. Anytime anyone in finance bails someone else in finance out. So it'll be interesting how this one unravels. You know, they weren't giving money to SVB. They weren't giving money to Signature Bank, right? But they gave money to FRC. And you know, even though we don't have swaps data and all of that, it'll be really interesting to see how it plays out. B of A, I believe. Main ones are PNC and JPM. Thoughts on PacWest or US Bancorp as the next dominoes to fall? So PacWest has a little bit more treasury risk. US Bancorp has a shitload of MBS risk. So US Bancorp may take time. And we may not see a failure there until we start to see, you know, a significant drop in real estate values, which hasn't happened yet, but is going to happen. I think both of their risk is probably going to extend out into a period where we start to see failures on MBS, which it'll be a little while, most likely. Monday, March 20th was precisely when the central bank's 7-day swaps were replaced by daily swaps. As of tomorrow, daily swaps are now being reverted back to 7-day swaps. This last happened 6 weeks after the COVID crash. VUPS, coincidence? I mean, no, more liquidity, right? So many things came in with the bank failure that provided liquidity. So we get this big rush of liquidity, and everyone uses it to buy, but they're buying derivatives, right? They're buying derivatives and they're selling out the underlyings, and we're continuing to see money flow away from equities into like repo operations and money market, and we're not seeing money come into equities, right? So equities are still just being propped by that reflexive ETF pumping and index pumping. Thanks, Mr. Gold. Can you go over QQQ and thoughts with Apple earnings coming up? Is that the make or break? I mean, Apple's bigger than like the rest of the top 10 biggest stocks, right? So yeah, it's a big deal. Oh, fuck off. Do you notice anything different with FRC compared to the other banks on why this one is special? No. I mean, besides that they got bailed out by major banks. Two Scoop, welcome to Dillionaire. Thank you so much, man. Hit me up on the Discord. I'll get you out of the country club after the stream. Anybody else cop that new GME NFT drop? No. I want to average down some of my June puts. Should I be looking to do that in the early part of the week? Or the latter half? I mean, VIX is really low right now. I don't know if VIX is going to stay low through the Fed meeting. For a small port, how would you play the Fed meeting? I'd probably try to remain mostly delta neutral. Wait till you get the results of the Fed meeting. and then position accordingly. Thoughts on the usefulness of the VIX 1-day ticker to track 0 DTE interest? Um, hmm. I mean, it lets you know how much volume there is on the 0 DTE side, but it's always just huge, right? It's done nothing but like just run wild since its inception because 0 DTE volume sky high. All right. Just got here. Could you see the market remaining flat right after FOMC? Hmm. I mean, it'll be volatile right afterwards, just due to the deleveraging, right? Or do you think the straddles are gonna hang on for the news? I doubt it. I don't think the delta neutral positioning is gonna persist through the meeting. I mean, we don't have a lot of data coming on the heels of it, right? Hold on, let me pull up the calendar. We got balance of trade, challenger job cuts, um, non-farm payrolls and unemployment on Friday. I don't know. I guess it'll depend on how heavily the Fed leans on like labor market conditions and their narrative. Last time they leaned on them pretty heavily, and the jobs data had a pretty big impact, right? Like back in February. I think the expectation is that we're going to see unemployment climb higher. Like it's forecasting a 0.1 move, and that may be true with all the layoffs that have been going on, but do you think DVN will miss on earnings this quarter? I'm looking to average down. They might. I mean, oil prices have been pretty low. So, although, I mean, let's see. I know Zom did pretty well. Um, Oxy, we're still waiting on. Oh, go away, bipolar bear. Let's see. Yeah, Oxy's coming up. On the 9th. So we got a couple weeks on that. Chevron's earnings beat. I don't think DVN's gonna do too badly. They got fucking hammered on their last earnings. That's when I first started buying into it, right? I mean, I guess we'll see. Obviously, oil prices down, being down, might not help them. So if you're interested in buying it, you might want to wait till after. Although it's really not getting that cheap again. Hmm. Yeah, here revenues were up, but EPS was down. I expect EPS might be a little bit better in quarter one, but also because estimates are down too, right? So they've scaled estimates. Generally speaking, I enter both sides of a straddle at the same time. Am I just asking to lose money? Does it really come down to the timing of entries on straddles? No, it helps to enter them advantageously, but you don't always get that opportunity to, buy your straddle, both sides of your straddle out of the money, right? If you're trading on like SPX, right? And, you're trying to enter a straddle at, let's say, 4160, you're not always going to realize the downside of this and the upside of this for a brief enough period of time to enter both your put and call out of the money. Would you say that this FOMC meeting is one of the more important ones due to the potential change in forward projections? Yes. Um, I mean, this FOMC meeting might be the most important FOMC meeting this year. Not only are we approaching the terminal rate, and a decision needs to be made on the terminal rate, but we're already experiencing a liquidity crunch over two rate increases now, and we're now moving into the third rate increase. It's expected to be at the same level, right? So, equal pressure on treasury liquidity over that entire 3 month time frame. Is the fact that the market has accurately predicted each rate hike correctly a case of the tail wagging the dog? It'd be nice for my puts for the market to miss this one and get 50 BPS. The market has not accurately predicted each rate hike. You go back to last June, and go back to the end of the Jackson Hole Symposium. Both of those instances, the market was expecting zero point 0.5 out of the Fed and not a continuous 0.75, right? And they had large sustained impacts over the following trading period. I also, because I'm debating doing a longer dated straddle and a 1 DTE strangle to hopefully capture a big move in one direction. So I did that last time, actually. I took a short dated strangle, and then I did a long dated straddle on FOMC. I did like 30 DTE straddle, and I did like 1 DTE on the strangle. Just to dodge some of the short-term implied volatility. It actually worked out pretty well. I mean, like, if we go back to the May FOMC decision, obviously it was crazy volatile, right? So I was able to like close out the strangle and I closed out the strangle and the straddle on the upside. I didn't think the news was very good, and then I rolled the call side of it, and then I held on. I think I overheld the short side of it and closed it out somewhere over here after this like little bounce that we had. But I mean, it's still profitable if you'd entered, you know, and going into the Fed meeting, right? And obviously, if I'd held the longer part of the straddle a little longer, if I'd held it for like 5 days or so, I would have been able to realize all of this on the call side. Hard to hold it through all of this, probably, but had I, yeah, there would have been opportunity to the upside there as well. Is the fact that the market is accurately predicted, I may be wrong, but it appears no one is writing a put strike lower than 1750 on USB yet. No one's writing a put strike lower than 1750? There must be. Hold on. What the fuck? Okay. I don't know why. IMC, welcome to Dillionaire, man. Can you take a peek at KDP? Here. Odd. How hard did they pull back guidance? You know what? I wonder how much their profitability is hurt by work from home. Are people actually drinking that garbage at home? Like, I know they have them in every office in the country, but if the offices are closing down, who the fuck are they selling Keurig pods to? I think people use Keurig more as things tighten and they stop buying $7 Starbucks. Do you have a hunch on how Apple earnings will be? Oh, you think they're going to use Keurig more? I mean, Starbucks is better than Keurig. Yeah, the insider buying's up. Well, let me look at something else too. Is it really that significant though? Hmm. Did you read the 10K? What's going on with their guidance that they got hit so hard? How's the downside for Lilly looking? I think it still looks pretty good. It's starting to move into that upper target range. I entered a few puts last week right after earnings. I entered a few more on Friday in the upper range here. If I get another opportunity to get some more this week, I'll try to. I don't know how fast it'll turn around if it gets rejected, but it looks like, I mean, it's obviously starting to. Gamma Max is still kind of up here at like 413. But calls have been selling off like crazy. So I expect that the turnaround isn't far out. This is more of a technical play. There's nothing really super bearish about Lilly. I mean, there might be in the long term if they run into any problems with their weight loss drug, but especially since they've pinned so much of their forward guidance on it. I think the rest of their earnings are doing moderately well. It's just a little overvalued right now. I mean, most analysts have, Lilly as like a hold in like the $300 to $350 range. A few have it rated higher, but not many. But mostly, yeah, it's just a technical play. It usually pulls back pretty hard, especially after they issue their dividend. There's good money to be made there if you're near the money and you have enough theta. I'm considering throwing 25% of my port at BTU Upstart CSPs, but worried that they could see more downside. I mean, it could. I think their post earnings recovery was pretty nice and still puts them above that like 23 to $20 range where I consider the stock relatively cheap. You might not get a better. Here's the problem with BTU, since we first started like looking at it back in 2022, there haven't been, a lot of opportunities to get it really cheap, right? As a matter of fact, there've basically been none. This is most recently, this is the cheapest it's been in a while. And, cash flows aren't pulling back. They're still doing phenomenally well. Their Australia operation still has issues that hopefully, as they're resolved, will lead to more profitability in the future. I mean, they're just a cash cow. They're making so much fucking money and not really doing a lot with it, which sucks for growth, but it's great if they start distributing that to shareholders, right? Which they've promised to do in the form of not only share buybacks, which at this point amount to, I think, 1/3 of their market capitalization, plus dividends and special dividends, right? Most of us popes own Keurig at home. Huh. Wait till the poorest find out about drip coffee. It's a total game changer. Oh, but Keurig is so disgusting. How do you guys drink that? It tastes like hotel coffee. This has to not be a problem unique to KDP with Nestle's Nespresso segment noting a decline in underlying operating profit. 22, 1.4. Sales remain flat. Interesting. I mean, yeah, probably not. And they still have their distribution for Dr. Pepper products through Coca-Cola, right? So it could be a good buy. I mean, the sell-off may have been a bit much after earnings. I'd have to look at the financials more. And determine, what specifically about their guidance is so unattractive. Because if it's gonna, is it like a value trap, right? Like, is it just gonna stay flat for 3 fucking years? Can you talk about Tesla and AMD and how much more upside they could see this week? Tesla's getting close to pulling back into the kind of range where I would like to buy more puts on it. Ideally I'm targeting, here, around like, it's about 170, 172 to enter more puts on Tesla. I'm going to wait till after that ETF FTD period though. right? I want to see how high it's going to climb. I don't know, right? I mean, when you're looking at like QQQ and SPY for the majority of your failures, it's really hard to tell what company they're on, right? So Tesla's in hundreds of ETFs. We'll see how high failures can carry it. But yeah, I'm gonna wait probably till after the Fed decision before making any kind of moves on this. But I would say 172 to maybe it retests like its prior, like this prior level. So that's around like this would be fucking crazy though. Maybe like 190. I feel like this is a stretch. Maybe here, maybe like 186. 186 doesn't feel like it's so far out of reach. So 172 to 186, I could see it climbing up to over the next couple days. But they're ETF FTDs, and they're not reliable, right? AMD probably not faced with nearly as many failures. Where do I have that on here? It recovered nicely here with the market pump, but I feel like it's gonna go right back down if the market pulls down again. AMD, hold on. So AMD just Friday moved back above gamma neutral. Similar to Nvidia, right? Where it was kind of struggling below gamma neutral for the entirety of the week. So yeah, just Friday moving back above it into close at 88.14 with gamma neutral at 87.28. Gamma max is at 100, but I don't think this period's going to push it up to gamma max. And generally speaking, over the last like year or so, AMD stayed mostly below Vega neutral, which is at 87.32 right now. 94.51, sorry. So yeah, I would say that the range is probably from like 88 to maybe 94. But it'll probably stay lower than that. There's just not a lot of historic support and resistance in here. What's the conversion rate of cash cows to hornless cows? 1-to-1, hornless cow. Just joined the stream. What did I miss? Go fuck yourself, bipolar bear. Don't threaten me with fucking... If you're gonna threaten me with class action lawsuits, class action sue me. See how far it gets you. Enjoy the ban. It's sterile and I like the taste. Do you drink your coffee black or with creamer? I love black coffee. I only drink coffee black. Hotel coffee is Keurig. Oh, people drink Keurig because of its functionality, not for taste. Comes with having 3 kids for me. But does it even have caffeine in it? It's like none of the coffee actually has time to brew. It's just that you just get like the brown stripped off of the beans, and then you end up with like brown piss, like piss water. I feel like piss has more of a kick than Keurig does. Do you think BTU's income will be entirely unaffected by recession? Yeah. I mean, they're a coal producer, right? And the majority of their business is getting coal for energy. If anything, they should flourish in a recession as commodity prices rise, right? Lizard King, welcome to Dillionaire, man. Thank you so much. Hit me up on the Discord. I'll get you added to the country club after the stream. I just need caffeinated piss water. I barely have time to shower on a daily basis during the week. I'm not going to be the barista for my household. Fair enough. Don't forget to write that book one day. Also, when Matt Kors collab. Literally never. And I don't want to write a book. But thank you, Johnny A. Why does HYG always get hundreds of thousands of put volume? Is it just a cheap hedge? Are they expecting the collapse of junk bonds? HYG's always got a shitload of call interest. Mostly hedging. Most of it's hedging. We are approaching a period of time where a credit crunch is possible. You know, if duration risks continues to increase, yeah, we could see some problems with the junk bond market. But mostly, yeah, it's options interest is around hedging. It's like doing a line of coffee. I didn't say it was great. It makes me want to short them though, Mr. Poopy Pants. It's so bad. One of the problems with Keurig machines are notoriously difficult to clean. It's only a matter of time if the mold and other nasty stuff builds up inside the machine. Maybe they fixed this. Nope, they didn't. I will say that at my old office, we had one, and the company would just replace the machine for free all the time. So I'd imagine that they don't make a lot of money off selling the actual machines. And they probably sell them at a loss, given that they never fought back on any kind of warranty claim, even though the warranty was lapsed. So yeah, I mean, They definitely make a lot of money off the pods, though. I mean, it's like what, a teaspoon of coffee powder in a plastic cup, and they sell them for like $1 each. They probably cost fractions of a penny to produce in bulk. If you're gonna buy Asana and the CEO, he can do up to $30 million share buyback. Float is 77 million. Would you get some now or wait? He's gonna buy back 30 million shares personally. I've heard some good things about their software. I don't really know shit about them, but I've heard some good things about their software. So 30 million share buybacks, almost half their market capitalization. But is it like a pump and dump? Like, is he just promising something and then it's not going to be realized? Because, I mean, I feel like if anybody thought that was true, the stock would be ripping right now. I don't know. I don't trust CEOs when they make statements like that. Like, I understand having confidence in your company and all, but buying back over half your market cap, or promising to buy back over half your market cap publicly, seems shady to me. That'd make me want to dig a little deeper. A big part of the beauty of home espresso is the ritual of puck prep and pulling your own shots. Also, it just tastes better. Yeah. Like way better. I mean, it takes me like 60 seconds to make 2 double shots. And I'm not like an experienced barista or anything. So I don't think it's like a time that like it probably takes just as long to put water in a Keurig and wait for it to fucking heat up and push through the little cup for you to get a glass. The difference is the $3,000 upfront cost of the espresso setup. Whereas you can get a Keurig at Target for $20. Wait, I've been tossing K-cups down the drain the whole time. I thought that's what everyone did with them. Inkjet style market. They can even pay you to get the machine as long as you buy the pods. Yeah. Yeah. I think my old office actually had a subscription like through Keurig because we used to get like pallets of fucking K-cups delivered. And the worst part is when I actually had to go into the office, it was like 120 miles from my house. And I would have to stay at a hotel while I was like working in the office. And there was fucking nothing around there. Like no, it was like out in the middle of the desert. There was no coffee or anything. So if I wanted coffee, I had to drink Keurig. It was the worst. And it was hot. It was hot coffee. And it was 120 degrees out every day. They're fucked if single-use plastics laws ever go through, but who's holding their breath on that? I'm sure that they're internally they're working on some sort of like biodegradable K-cup. I mean, how fucking hard could that be? If Starbucks can make biodegradable straws, I feel like Dr. Pepper can figure out a biodegradable K-cup. How do you think uh how do you think would a sea blockade of Taiwan by China over a longer period affect the market? And cut off chip production. So that'd be a big deal. It would fucking destroy the semiconductor sector and then anybody reliant on semiconductors within a year or two. Can you talk in depth about what your Nvidia short thesis with increased interest in AI? I think AI doesn't I think AI doesn't make any money. I don't think AI is going to make any money for the next 5 to 8 years. Uh, so right now, it's simply a cost, right? And businesses that are interested in it are already pulling back a significant amount of their capital expenditures. You can see this with Amazon. You know, Amazon made it pretty clear that, and they're the largest cloud provider in the US or in the world. And they've already made it very clear that, you know, it's going to be several years before they have those, you know, systems built and in place. So right now, I don't think AI is making any money. Meanwhile, you know, Nvidia's, you know, spend on research and development has increased. So their overheads are up. Their inventories are up because no one's buying their latest generation of GPU. So their gaming sales and personal computing sales and sales due to crypto are all down, right? You know, ETH moved to proof of stake. You know, Bitcoin's on ASIC. No one's really using a ton of Nvidia GPUs to mine it anymore, not substantially at least. So you know their big money makers have gone way downhill. Their revenues are down 30%. Their EPS is down 50% year over year. They're simply not going to match their performance over the next several years that they saw in 2020 and 2021. And yet they're trading currently at prices and a valuation higher than they were trading at back then. So I think it's only a matter of time before some realization of, you know, the state of the business needs to be considered. And I think when that is, the price of the stock is going to drop significantly. Because right now, you know, Nvidia would have to like 500x their previous performance in order to meet the price that they're demanding in the market now over the next 5 years. So is it going to be slow? Yeah, I mean, when I shorted Nvidia, it wasn't the hottest stock in the market, right? I don't think that changes my thesis though, just because it's got some hype around it. They just make the cups thicker, and now they're double use. Ew. Full float is like 233 million. Well, I was just referring to the free float. He'd be buying substantially over half of the free float. Or almost half of the free float, sorry. I'd have to do a lot more digging before I formed an opinion on it though. That's a pretty big multi-billion-dollar commitment to make. The low end Gaja is pretty bomb and not very expensive. Yeah, it's like $500. 440 if you get a good deal. We'll hear your thoughts on Deck. Deckers owns UGG, Hoka, Teva, Sanek, and a few more brands. Initially looked at the stock to short, but the stock is resilient. So are those brands. I mean, people always need shoes. Their cash flows have improved dramatically. They do have a lot of current liabilities. But I mean, if they can keep up, you know, cash flows of 600 million a quarter, that's not such a big deal. The margins seem to be doing pretty good too. I don't hate it. I mean, I wouldn't want to go long at all-time highs. Maybe wait for like a market pullback or something, but yeah, they look like they're doing pretty well for themselves. I'd watch their cash flows. Obviously, that's the big risk there. If their cash flows pull back in any substantial way, it's gonna make that short-term debt risk more pronounced. Home espresso's upfront cost may be high, but I did the math comparing to Starbucks, including my home delivered personal roast. Home espresso pays for itself in less than a year. Yeah, it does. Even if you buy like a $5,000 machine, it pays itself off really quick. Also, there's like almost no depreciation in espresso equipment, like in the secondary market. Like my old machine, I sold for like, almost the same price I bought it for. A biodegradable K cup already exists at my Costco. Interesting. What's up, Gurg? I'm fashionably late to the members only party. Death to Nvidia. Ideally. I don't know if that's just marketing, but I read that Google has some pretty advanced AI going on they are not willing to release yet. I would think that with all their data, it might be true. Yeah, I mean, AI is only as good as what you're able to train it on, right? And Google's definitely able to train AI on far more data than a lot of other people would be able to. I don't know if their, AI is focused on the same kind of like language models and stuff that like Chat GPT is, but I'm sure it serves a purpose, probably in advertising more than anything else. But since that would be their focus. Google also said that they're using, Microsoft and Google have both said that they're using, proprietary chip technology for their AI. So I don't know where that leaves Nvidia in the long term. I have a pretty good friend who works with, like MIT's machine learning lab, and I got to talking to him about Nvidia, and he seems to feel that Nvidia's like cost to scale is too high, and their chips are not very efficient, and kind of likes the AMD stuff that's go like the I think it was the M300 chip that he was going on about, and he was saying that they're far more power efficient, and they have less maintenance requirement. I don't know if they're as good. He rolled off a bunch of technical shit to me, but then he was going on about Xilinx, the like AMD acquisition, and their like accelerators. So I mean, I don't think Nvidia is the only one in the space, at least. So there will be competition, and right now they're being valued not only as if AI is going to make substantial amounts of revenue in the near future, but they're also being valued as if they're the only company producing these chips. And you still have you have Intel, you have ARM, you have AMD. There is competition. What do you think about Activision Blizzard short now that the Microsoft deal is dead? Is it dead? Like fully? To the Asana dude, it just broke 200 MA. Wait until it retests $11 and be patient. Yeah, I mean, it doesn't look like it's turning around anytime soon. And then if he's doing the buyback, when is it going to be effective? Like, is he going to buy it back over the next 5 years? Is he going to buy it back all at once? I mean, there's a lot of questions I would have. But I'm sure Regards Kiki will reach out and give me more information on it. Coffee machines sound like Rolex watches or Patek. They don't really go up in value after you buy them, but they don't lose very much value. I mean, the machines are built to last a lifetime with maintenance, right? So, um, generally anything that goes wrong with them can be repaired really easily. Annual maintenance on an espresso machine? It depends on how good of like if you just put any water in it and like don't take very good care of it, maybe like $200 a year. If you take really good care of it and you use a filtered water or a softer water or harder, well, not a hard water. and you keep it clean and keep the boiler clean and everything, maybe like $100 every couple years. It's really cheap to maintain them. Do you want me to make FTD charts for other tickers? I mean, I'll let you know if anything comes up where I'm interested in their FTDs. Which Nvidia chips what? Smooth it. I mean, Moss is coming up on its bigger season. I bought some a little while ago. I'm looking to average down, ideally under 40. We haven't seen that price yet, but if we see a market downturn, we probably will. So if we see the market pull back to like the 3950 or 3900 range, I expect I would be able to get another buy into Moss in the $40 range or so. But I did a write up on what I consider, future valuations for it. I think they're a good deal, and I mean, we're not going to see, a significant decline in the need for fertilizer, right? So I think as like a buy and hold, if you can get it around this price or cheaper, cheaper is ideal. Um, it's a solid company. They have good cash flows. I don't think they're going to be largely affected by recession, which is important. And if there's any more, if there's any extension of the Russia Ukraine conflict, we could see its price rally again on the backs of commodity or supply chain crunches. My home espresso machine has paid for itself in 5 months. I'm never going back. Nice. I thought it was all GPUs. No, they have like proprietary like server stacks. I mean, they are. I think they're basically just a bunch of GPUs, like not daisy chained together, but used as like, and each GPU is used as like an individual core kind of idea. I'm not a like microprocessor engineer, but I think they're like server stacks are basically like multiple GPUs, running as individual cores. AI can definitely facilitate a push out of lower level technical jobs. It could. After what I've heard from people's commentary on the business, the deal is dead in the water. I could always be wrong, though. I mean, Microsoft has a lot of money to influence any political pushback against their acquisition, right? It may take some time. It may delay the process, but I think it's still risky to short it. I was so flattered by your friend request yesterday. That wasn't me. But saddened to see your account got banned before I could accept. Hopefully you get your account sorted out soon so we can be friends. I missed the write-up. I've been watching it for a while, and it looks pretty appetizing at these levels. Just search it up on Pickles Picks. Like you can search in Pickles Picks and then just type Moss, and my write-up should be in there with my expectations for it. Oh, what's your price target to start messing with PFE? I don't really have one. I haven't been paying a lot of attention to Pfizer lately. Do you know any good silver mining royalty companies? No. It seems like big storages are running out of silver. It's not like it's hard for them to get more. To recap SPX prediction for the week, potential dip Monday due to FRC positioning. As we get closer to FOMC, less volatility as straddles are entered, maybe 4150, and then volatility at the end of the week. Yeah, I mean, I think where we open tomorrow is going to be very important for the ranges we're able to trade in for the rest of the week. I still think the upper bounds of like the 1.75 deviation on ES and the 4200 level on SPX are going to remain very, very difficult to cross. So I don't think we have a lot of room left to the upside. Probably a fairly narrow projection for the upside, similar to last week. And I think, we're likely to move closer to at least the near term gamma neutral level as neutral positioning comes into FOMC. So yeah, I wouldn't be surprised if we see a move down due to FRC, and then probably some stabilization in the range we find ourselves in. But I think we're still, very much locked between gamma neutral, like the long-term gamma neutral and the faster one. Even last week as these moved around, they moved down with our drop, and then they snapped back up into this period. So we really haven't traded very far away from like the faster gamma neutral level. If we do move below this, obviously downside starts to accelerate, right, as it has in the past. Um, we get a small run because of Monday's FTDs. Does the peak price improvement of GME stay a few days normally? Thanks. Well, we've already started to see some realization of liquidity over the first 4 days of ETF FTDs, right? We pulled back from our trend of increasing illiquidity, but we haven't realized a lot. Obviously, the most substantial pile of ETF FTDs is coming tomorrow. I think, based on options positioning right now, it's really unlikely that we see the upside of like 2250. And I'd be surprised if we moved that high even. We may get more hung up at like the 2021 level, like right here. And then that's still very dependent on the market continuing to rise, right? If the market careens off a cliff tomorrow morning, GME FTDs are going to be realized with probably very little price volatility at all. So there's a lot of risk in playing the upside, because if you don't have kind of the perfect storm, they don't play out as positively as you would want them to. Any chance we see new market highs on the back of no changes to the forward rate by Powell? Any thoughts on why you think he's been so unwilling to go hard? Banks, politics? I mean, it's both, right? The banks, I think, are less so, but the politics definitely, because I mean, it's kind of a stalemate between the Fed and the Treasury, right? I mean, if the Fed creates more illiquidity, they put the Treasury in hot water, and then the Treasury is going to want to push back by forcing the Fed to take the blame for any liquidity crisis and try to foist off, dying banks into the hands of the Fed. So at some point that has to break. Obviously the Fed probably should have done 0.5 last time and they eased off with the banking crisis. But now that they have those safeguards in place moving into this meeting, even though FRC's failed, do they can they really afford to take a standoff policy any longer? Eventually push is going to come to shove, and entrenched inflation is going to present enough risk that they're going to have to do something a little more extravagant, right? They're going to have to probably shock the market in some substantial way. The problem with that, though, being that there's a significant amount of treasury shorts, and if people start piling into treasuries and lose faith in the economy, we're probably gonna see treasuries get squeezed in a substantial way, which prevents a systemic risk not only to the dollar but to U.S. debt as well. So it's a big deal if they push too hard. You mentioned expectations on FUBO earnings. I mean, they're not very high. I will say that from a liquidity standpoint, FUBO is starting to look very good. We're roughly in the same range we were before the run to $3 back in December. FUBO liquidity is pretty fucking low right now. And a little higher than we were moving. I mean, there's more shares now, technically, because of the offering. So I would say we're just roughly we're relatively in the same range we were back in August. So yeah, I think FUBO's got some potential for something to happen into this OPEX period. I don't know if earnings is going to be the catalyst for that, but if earnings aren't bad and they're still on track, I think that's just going to add more confidence to institutions that have been accumulating shares. I mean, FUBO's primary goal is to be profitable by like end of 2024, beginning of 2025, right? Their C-suite's heavily incentivized to meet that goal, and so far they've been on track. I think if they just continue to show that performance, they remain in a good place. Obviously, the near term price action stuff that happens and the volatility from shorts, that's just a bonus. It gives people an opportunity to sell covered calls or get out of CSPs or profit on synthetic longs, right? But it's not the realization of the play, right? It's just stuff that happens in the interim. I'm the guy who had the 64110C on Wednesday. I sold on Tesla 4110. Ouch. That sucks. Was there any way I could have foreseen the breakout? At the time, there weren't many calls on the chain over 4110. You're right. And that's the hardest part about trading these big zero DTE pushes, is the risk in carrying the position beyond the point where they start rolling it up. So what's been happening with it is, we get these big piles of gamma accumulation out of the money. And then, price rockets into them, and then it locks up in the upper range, and then these pull off and move up higher, right? And so the intraday process of that repositioning is something that you have to keep an eye on. But sometimes, it's not so obvious. Sometimes they start pulling the lower position, right? The in the money positions, and they start buying futures, which starts ticking the index up, right? Into seemingly nothing. And then they start loading up more zero DTEs, right? So you're almost chasing at that point. So it's really understandable. I mean, even I've had to, pull back some of my normal risk tolerance in order to profit on these moves, and that puts you in a dangerous position, right? So I would say, at the risk of changing trading habits substantially for the worse, make what you can off of it. Don't get greedy. Don't necessarily bet on it going higher. I mean, it's good to have some runners if you can pay for them from your initial position. If you can have some, kind of lower risk contracts, um, that you've already profited on the position substantially, and you're just seeing what will happen. Then yeah, those can see a lot of profitability if things continue to move up. But you know, uh, towards the end of the SLD period, we started to see those long positions break down into futures sell-offs, right? There were a few days where we ran up really hard into that upper range, and then futures shorts just pulled the rug and killed all the calls. So if you hadn't had a stop there, you could have lost a very, very substantial amount of money. So I, yeah, I think no matter what, you have to maintain some element of risk management. Even though the market, I know over the last 2 days, is incentivizing just letting your calls ride unprotected. Um, that's not a good habit to get into, right? And these pushes, they don't last like a substantially long period of time. I don't know if point two. I mean, 0.25 is the expectation. I would say that the Fed's choices break down to 0.25 and an increase in the terminal rate, which is lower shock but less productive, right? So this choice, let's call this choice one. This choice goes, it doesn't go as far in furthering their goals, right? But it does create less shock in the equities market. And I would say choice number two is go higher, 0.35 to 5, and lock the terminal rate for the foreseeable future. So an effective pause. This is obviously far more shocking. But it aligns with their goal of getting, the federal funds rate over the rate of inflation. So more long-term efficacy. You think Qualcomm earnings will be bad because Samsung lose 95% profit? Probably. I mean, Samsung's losing profit from a lot of other divisions as well, but yeah, I would expect Qualcomm to suffer, a similar fate. Isn't the Fed releasing some documents this Wednesday pertaining to SVB and bank failures from a couple months ago? It should be from like a month ago, right? And I believe so. I believe they should have their report ready from their emergency meeting. Yeah, I think it's just around a month ago now. PNC Bank likely winner of auction for First Republic. Okay. Well, I think they're a little more stable, so good for them. So the Fed increases rates too much, it creates a treasury squeeze and kills the dollar. If they don't raise foreign investors, it might pull back due to crushed expectations, killing the US dollar. Yeah, everyone's threading a needle right now. Is the new strategy to identify large zero DTs at market open and buy a lotto ticket at the top of the chain? I don't think so. Because, I'd agree with that, but like Tuesday, for example, we opened we opened up here at like 40, like just below 40.30, right? And gamma was, fairly even across the chain. Maybe even a little call side favored, right? And this would have been open. And this ended up selling off and we ended up moving down, right? But if you'd bet on the higher pile of gamma there, you would have bet on the upside and lost. So those zero DTs are very liquid and they can move very fast. We saw that with the bounce here on Wednesday. We bounced up. The put position sold off almost completely. Bears are very skittish. And then they all just re-entered and we dove back down again. And those movements can happen in minutes. I mean, I've seen the gamma move up on a single strike like 400 million in one candle. So you've really got to be on top of it. I will say that if you have good risk management and a good sense of like capital allocation, now is an amazing time to make money on the indexes. Even if you're not good at TA and the rest of the analytical stuff, if you can just manage risk and set tight stops, there's a lot of money to be made. I don't understand why weekday streams have more viewers than Sundays. I don't know. Not everyone can tune in on Sunday. It's the weekend. No one wants to talk about the market. What's up, Greg? Celtic here. I'm late to the stream. Little carbon copies are demanding as heck. When I first flipped the stream on, I heard market fall off a cliff tomorrow. Is this the bull case? No. Also, what are your predictions for Apple? I mean, their cash flows have been declining and they haven't released any, new product lines. So, revenues are stagnating. I think Apple's overvalued, but it's Apple. It's risky to bet against it. That's for sure. Yeah, I mean, that's it. I don't know what Apple's going to pull out of their ass. They definitely have the money and the resources to pull something out of their ass. And if it's interesting enough, the market will probably react favorably. Otherwise, I think they're in the same situation as the rest of tech, meeting lower expectations, but fundamentally failing year over year. I could see Apple lowering guidance too, because insiders tend to like to buy the stock when it's cheap, and then they can affect share buybacks later. Especially if they foresee a period of stagnation. That's also another question that's going to face the Fed this week is, are we moving into a stagflationary economy? I mean, we have increased core CPI and slowly becoming entrenched inflation. We have a growth pullback in GDP, and I think a question facing the Fed this week is going to be how heavily to weight the advanced print on GDP. Obviously, it's bad. Price indexes are up. across the board, and GDP is down while the labor market remains persistently strong. So we're very close to a stagflationary environment. And you have to assume that the Fed would have some interest in preventing that from happening, or at least reducing the period of time that we are in stagflation. And I think that's going to also weigh on their, not only their decisions regarding guidance on the terminal rate, but it's also going to weigh on their decision for the current rate increase. What's the most bullish outcome that can come out of the FRC situation? I don't really know if there's a bullish outcome. I mean, they don't go into receivership with the FDIC. That would probably be the best scenario. It sounds like PNC is winning the bid, so they probably won't. It's still a bank failure. Obviously, it's not good. It shows that the liquidity crisis in these banks is continuing out beyond, the Fed opening their repo operation to them and backstopping their losses. So risk persists, even though the guarantee was that it would not, and that's going to create uncertainty, and uncertainty always leads to fear. How much fear, it's hard to say, but there will be fear. Apple VR, Apple VR AI. Apple's already, previously stated that they don't have a lot of interest in artificial intelligence in the near term. I don't think they're gonna walk that back. I think the bigger question should be, the market should be asking itself with all this AI hype, is why the US's largest cloud computing service is saying it's going to take years to get these systems online and achieve any kind of profitability with them, and yet Nvidia is projecting returns on these products over the next 6 months, right? Because those two statements don't align. So someone's lying, right? I mean, but Amazon owns the factories where the soft goods would be cranked. Anyone buying FRC simply buying a call contract with 100 billion ask and 0 bid, so instant down. I mean, I think with the FDIC news over the weekend, anybody who has currently open contracts on FRC is fucked. Should be fucked. Same with what happened with SVBA. I don't know if Nvidia's made any announcement about completing their shelf offer. They've definitely had plenty of opportunity to sell off those shares over the last 4 weeks. And I think at some point this year, these tech companies, if they remain at their current valuations, are going to take advantage of the equity being offered by the market, right? I see. And that's kind of what started the collapse of the .com bubble, was the big tech companies like Cisco and stuff at the time were just like, okay, well, if we're valued this highly right now, let's take advantage of it. And they started doing shelf offers, which led to shareholder selling, which led to panic, right? Because there's no way, not only are institutions not fooled by, the current euphoria on these prices, the companies themselves aren't either. they have a far better internal view of their future revenues than any outsider would have. And they definitely know when they're overvalued. Anyway, I think that's about enough for today. Um, does anybody else have any questions? No? They could be announced at any time. They don't have to be announced with earnings, although they're more likely to be announced with earnings. Greed affects them just as much as anyone else. If they think they can make it through this quarter and realize even higher valuations before their earnings contract in a significant enough way that even the analysts' low expectations can no longer match the decline in their growth, then um, that's the point at which they are most likely to do shelf offers. How's the tinfoil hat theory looking now? I mean, I feel like it looks pretty good, especially with the failure of FRC. Um, I think towards the end of this week we started to see some covering and some reduction in duration risk on possibly like the floating rate side of interest rate swaps. As we saw a few days where the market pumped, but treasuries also pumped. I think that's a pretty good indication that there's some short covering going on. And if they're covering shorts, they're protecting downside, which means they expect the market to turn down, right? And then I think if we realize a bottom in the 3,800 3,900 range, and then also realize a quick snap back up to these 4,000 4,100 levels, as yields decline sufficiently. I think there's enough correlation there to start building more on top of that thesis. It'll be hard. I mean, the thesis is missing a lot of data points that aren't available to the public, so that's difficult. But I mean, the failure of FRC was inferred by the thesis, and FRC did fail. So we'll see if that contagion continues to spread, especially with another rate increase from the Fed on the horizon. What was the expectation of SPX price by the end of June? And also, if Apple ever has Microsoft, that kind of move in their earnings, the market would jump to 4,300. I mean, I don't have any expectations for price action on the market by the end of June. I mean, I think the macroeconomic situation only looks worse over time. I think Apple would have to do quite a lot to get the same post earnings performance as Microsoft. And short of massive share buybacks, I don't know how they're going to achieve that without any new product lines or revenue streams. So yeah, I don't know how to answer that any more for you. I mean, you've asked me two hypotheticals. One of them was inferring that the market's going to treat Apple the same as Microsoft, which is, I mean, they're very different companies. And then I don't really know how to answer where SPX is going to be by the end of June. I would say based on the current market performance, probably recovering from an SLD drop. Possibly in the middle of one of these upward cycles of price improvement. If this shit continues a lot longer, that is. Yeah, cell phone sales have been going down pretty significantly. Apple's product obsolescence has been dropping off, so people are keeping their phones longer. Um, Yeah, they've got the whole fight with the EU over the charging cables that they've been dealing with, which is, a significant amount of revenue. And the future for Apple doesn't look great right now, but they have the money to fund quite a lot of surprises. Are we nearing a buy range for Upstart 13? Yeah, I'm starting to like the way Upstart's looking. I want to be cautious with it before the Fed meeting, obviously. Since the Fed's forward projections have a very big impact on Upstart's business model. I'm gonna try to be patient, but I do like the price. It's finally now at a price where I feel much more comfortable accumulating. Right, I would like it lower, like by about $1, but we may not see that range, so I'm not going to be overly greedy. But I'm going to probably start picking up synthetic longs over the next couple weeks, provided that the Fed isn't going to move forward with a plan that sees multiple rate hikes. So if the Fed is locking in some kind of pause this year, then yeah, I'm pretty interested in accumulating more Upstart in this range. Also very illiquid right now, which is exciting. Also, and a ton of FTDs coming up over the next week on Upstart. Not only ETF side, but MM side as well. He's saying if Apple can pump the market like Microsoft after earnings. I mean, I don't think Microsoft alone pumped the market. It helped, but I mean, you're talking about trillions and trillions of dollars flowing into the market versus, maybe 100 billion, 200 billion on like Microsoft or Meta. The markets were going to pump probably regardless of the earnings. They were well on their way to pumping before the earnings already ever happened, right? They were already starting to buy those positions. The earnings just accelerated that. Well, at the point that Meta had earnings, right? You look at like Google and Microsoft earnings, and the market dropped after those, right? This was like Google and Microsoft were like back here, and then Meta was here, right? So the market turned around at Meta's earnings, but I don't think Meta had anything to do with that, right? This is trillions and trillions of dollars, and Meta picked up 15% market cap, so this isn't all just Meta. Oh, FSLR is pretty illiquid. I think their total free float is like 100 million shares, and pretty heavily institutionally owned as well. So, if institutions are selling an aftermarket, FSLR is going to drop hard, but it's illiquid. It's got a lot of illiquidity, so its price performance to the downside and upside can both be very rapid. I've warned people a few times about how fast FSLR's price can move. Um, over this period where it started climbing back up, it climbed very, very rapidly. I think over time, this drop on their latest earnings can probably realize maybe the like 150 level. I do have stops on my long dated positions, but they're now all very much in the money. So yeah, I'm just gonna see how the negative sentiment continues to play out. Remember that they'd in their earnings report in Feb, they'd upgraded their guidance talking about their profitability into the end of the year. And that was kind of around the time that I was talking about them having to increase capex in order to meet the production demand. And then, as you see with the most recent earnings, revenues are down 23%, EPS is down 60%. So they really they really lied to their shareholders there. And that's not gonna leave a lot of happy people behind. Is it Tinfoil theory right now that they will never allow a strong equity market downturn? Or, I mean, I think they'll try to prevent it. I think big prime lenders took on a shitload of floating rate interest risk back in 2020 and 2021. And they did not foresee the Fed raising rates to the levels that they have. And I think that floating rate risk is now substantial. And they have a lot of risk on a bull market, and they also have a lot of risk on an extreme bear market. So, if the market turns down hard, the treasuries they use to hedge get pressured, right? If the market runs, then yields are going to skyrocket. If people gain confidence in the market for too long a period of time, right, then yields are going to just shoot through the roof. I mean, anytime we move up and stabilize even a little bit, yields are moving up 10-20% in a couple days. So they can't really allow a bull market or a bear market to exist substantially. So they need to keep the market unstable, but it can't be so unstable that it promotes fear. And I think that's what we've seen, especially since August, right? If we look back, is that we have seen both, peak exuberance and peak fear occur over and over again, but never for substantial periods of time, right? But it is contracting, and their ability to control the markets, diminishes. So, if we're right, then their goal is to, do exactly what they've been doing and, pump the market and drop the market. It's like, oh, this is great news. Oh, this is bad news. This is great news. This is bad news. I mean, they're kind of doing what the Fed was doing in the early part of 2022, right? But they're doing it positionally instead. Where the Fed was like, oh, everything's okay, and then the market rallies, or everything's shit and the market drops. They're using narrative to control sentiment, essentially. I think their positions are safe when the Fed pulls back rates. That's why there was such a strong push after the bank failures for the Fed to do exactly that. And the Fed didn't, right? They continued to raise rates. And they will probably continue to raise rates. I don't know. I have FSLR puts for June, September, and Jan. So I've got time. I'm in the money now. I would be cautious after such a rapid drop recently. That could bounce back a little, but that might present another opportunity to move into a longer dated short. I think that their capital expenditures are going to have to increase probably for most of 2023 in order for them to meet their production demand. Once they do, probably a really great company. They have, tons of free government money. And their order book is packed to the brim. They simply just didn't have the production capacity to meet the demand. So they're filling orders for products they can't deliver, right? And so that's, ultimately bad in the short term. And that seems to be that thesis seems to be playing out. I don't think they're a bad company. I don't think they're going bankrupt, or I'm not like long short on them. I think they are going to have a period of drawdown, in order to uh, scale out the company that they want to be. Tesla's also making orders for products it can't deliver yet. Haven't they always? Anyway, thank you guys so much for tuning in. I'm going to get on with the rest of my day here, but if anybody has any questions or anything, feel free to DM me over on the Discord. I should be around most of the day. Thank you all for tuning in. Make sure you drop a like before you go, and I'll see you tomorrow. It's going to be a fun week. Later, guys.